Hi, this is Jason Sen from daytradeideas.com. Going to have a look at some commodities today. This is the daily chart for spot gold. It's Friday the 20th of September, and you can see this chart goes back to the beginning of July. We've had a nice little uptrend which was broken earlier in this month of September on the 12th. This big red candle you see as soon as we broke this trend line, and also the 100-day moving average, which was around the same area, around the 1355 area. As soon as we broke that, market sold off very heavily, but we managed a really nice bounce this week on that FOMC announcement. We shot higher. I think it was around $80 or something from the low to the high on Wednesday. Yesterday we consolidated some of that gain, but we were held nicely by firstly the Fibonacci resistance level here at 1374, which also coincided with a couple of these trend lines here. You can see very clear the uptrend line. We've revisited it. This is quite classic technical analysis stuff. You break a trend line, you bounce, you retest it, and then if you fail here, you sell off again. And this is what looks like could be about to happen. We've got a little short-term downtrend line as well, and these intersected quite nicely all around the same area, around 1374. So that was really tough resistance yesterday, and we only made it as far as 1375 anyway. So I think the risk now, in the very short term at least, is that we start to head lower again, perhaps into next week. We've got the 100-day moving average down around 1348, 1347, so that looks like a realistic first target. Can't really start getting optimistic about this market unless, well, firstly we've got to get through this trend line here at 1369, then we've got to get through yesterday's high at 1374, 1375, which is also this Fibonacci level, and then next week, we're looking at this the uptrend line, which will now act, of course, as resistance, and that's in the low 1380s. I mean, around 1381, 1382. So quite a lot of resistance for gold to tackle, and it's really only above, if we manage to get above this 1382 area and preferably close above it, that we could start feeling more positive. But otherwise, gold is in a longer term bear trend. This rally that we saw through July and August was really only a rally, a bear market rally, a recovery from a very, very oversold position, as you can see from, I'm just trying to scrunch this up. As you can see from, here we go. The last leg down was from October last year, and we only really managed to bounce to the 38.2% Fibonacci retracement target, which is always a big resistance level in a bear market, and that was at 1415. We did blip through it to 1433, but we didn't really manage to close above it, and then we just sold straight back off. So gold, from a technical perspective at least, is kind of doing what it should do, and let's see now if these trend lines hold this little rally this week and we see a sell-off again into next week. On the subject of commodities, I just wanted to point out nat gas, because it's working quite well on a technical level as well. This chart goes back a year, so we were in a fairly steady uptrend, but that was broken just at the end of July. We sold off, we've rallied back up. Now we made it as far as the 50% Fibonacci level at 3.787. We've managed to just break above this trend line here, the downtrend line. But of course the uptrend long line, the year-long uptrend line, is now acting as good resistance as well it should. Yesterday we gave it a bit of a test. We got up to 3.820, almost exactly to that trend line, as you can see. I'm just going to blow this up a bit more so it's clearer. So the question is now, have we seen the end of this little bounce through the late summer and into September? I've magically appeared this little uptrend line, which just goes back to the 8th of August, so about 6 weeks or so, 5 or 6 weeks. So this will be quite crucial now. We've got the 100-day moving average at 37.19, and we've got the 200-day moving average at 36.70. So these are sort of levels we want to watch carefully. The 200 days work quite well in recent days, so below 36.70 is going to be a problem. We're going to be testing this trend line, which is around the 36.50-40 area, and a break below there would signal then some selling pressure, I should imagine. Only really a move above this one-year trend line, which is around the 38.30 area. Only really a break and a close above that 38.30 area would now allow us to